pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, the first thing, we have to do roll call. Almost forgot that.
All righty. Commissioner Blaney,
Present.
Commissioner Good, Commissioner Biggs,
Here.
Councilmember Rivas,
Here.
Councilmember Graham,
Here.
Councilmember Jessen,
Here.
Councilmember Brickner,
Here.
Councilmember Paparad, Councilmember Sims,
Present.
Councilmember Bozak,
Here.
Advisory Member Vesely,
Here.
Advisory Member Ritzy, Advisory Member Payette.
Oh my God.
4, 5, 6, 7, 8, 9 present.
All right, thank you. Approval of minutes for November 16th, 2021. Do I have a motion?
Motion approved.
Second.
Motion and a second. All those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion carries. Reorganization, we'll start off with President.
Make the motion that Laura Blaney remain as president of the foundation.
I'll second it.
Thank you. All those in favor of me repeating another term as president signify by saying aye.
Aye.
Opposed, same sign. Motion carries. Thank you.
Motion, Councilman Mike Jessen is retain the position of vice chairman.
I'll second. Got a second over there. All those in favor signify by saying aye.
Aye.
Opposed, same sign. Councilman Mike Jessen is the foundation vice president.
Thank you.
All right, we'll move to new business. We have a resolution transferring our foundation earnings at $5,481,760.
Motion to approve.
Second.
All those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion carries. And just to be clear, this is the money this is our spending plan money. Okay, next we have a resolution transferring foundation earnings from Foundation Holding Fund to Foundation Budget Fund. Amount of transfer $4,742,008.
Motion approved.
Second.
All those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion carries. Okay, and then we have a second amendment to our investing consulting agreement effective January 1st, 2022. And this extends our contract with Capital Cities for another 3 years.
Motion to approve.
Second.
All those in favor signify by
Question.
saying aye.
Were we on a previous 3-year contract with them? Is that what we
Yes.
were doing?
Yes. Any other questions? Sorry, I didn't mean to. All right, all those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion carries. All right, let's move on to our Capital Cities presentation. Corey, you want to take it from here?
Yes, thank you. Just as a reminder, my name is Corey Waddell, Senior Consultant with Capital Cities. It's great to be here this afternoon. Here, I'll take this down. So we'll cover first our normal performance and evaluation report. I want to hit on the agenda items real quick, and then I'm going to actually hop into our special project this quarter. But you can flip to the first page behind your book here, and it'll be the second page of the presentation there. This is just the considerations and observations for the quarter. Previous page on as I noted, our item for discussion, I'm going to cover here momentarily. Every year or every January, February meeting cycle, we cover our annual market review. So it's a look back on what happened in the previous market, as well as some themes and topics we'll be looking at coming forward to the next year. And then you guys also just covered this, the annual distribution. We just have that noted here that we did calculate that as of the end of the year. Given this 8.6% return that the portfolio had, it did support the full 3.25 spend for that $5,481,000 calculation there. So I'm actually going to turn your attention behind tab 1 here, and if we could go to the other PDF. Again, this is our annual look back on 2021 and our outlook for 2022. So if you look to page 2, this is just a quick agenda. We'll have a couple pages where we hit on what happened in the markets in 2021, the themes that were really driving those investment market returns in 2021. Then we'll look ahead to what we think might be those themes or popular topics in the markets for 2022. And then note on, all of the fiduciary things that we need to cover as part of planning for these assets. So turning the page to page 3, here I'm not going to read all of this to you, but basically what we do here is break down the 2021 calendar year into quarters. And really the resulting theme or theme that played out quarter to quarter was really that risk assets really led the calendar year. So equities in general, mainly U.S. equities, you can see those are the blue bars on the far left, was generally the highest quarter in, quarter out. Another theme was that fixed income was really challenging during the time period. You'll see here in a slide that broad fixed income was actually negative on the 2021 calendar year. And if you look, you can't see the bars because they're not plotting anything, but the far rightmost column on all those charts is actually cash. And we're not earning anything on our cash deposits right now, just given where the Fed fund rate is. So on page 4, here's where we always update this calendar year timeline with our updated returns. You can see the gray bar at the far right is the resulting returns for 2021. Again, some themes that played out was that equity markets really drove the overall economy. The topmost line there is the broad U.S. stock market, so large and small cap included, was up over 25% for calendar year 2021. Most areas of the stock market were. International stocks lagged domestic stocks a bit. Emerging markets actually were slightly negative on the period. And then again, the big story in 2021 in terms of challenging markets was the fixed income market. We're at all-time bottoms for most yields, and we saw some rising yield environments that created some negative returns in the fixed income marketplace. But you can see the aggregate index is the broad proxy for U.S. fixed income. It was negative 1.5% for the year. Now, if you look at the average 5, 10, and 15-year returns on the far right, we have some really strong numbers as again, we've had a really long bull market here. The 5-year return on U.S. equities broadly based is about 18% on average over the last 5 years, and that includes a negative 2018 year. So it's always important to keep in context kind of the performance that we've seen when we're talking about, the current performance as well. On page 5, I just want to update you on where yields stand. This is a Treasury yield curve chart. Just to remind you what this depicts, it shows you different interest rates for different maturities of U.S. Treasuries. And you can plot this at different points in time. And it gives you a broad basis for what the price is for credit markets at any given time. The 2 lines that I'll draw your attention to here quickly are the dotted blue and the orange. The dotted blue was where we ended 2020, and the orange is 2021. And you can see a shift upwards in yields. And so this meant, money was less accommodative to end 2021 than it was at 2020. It's still far below where we've seen historic levels, so I think this is going to be a topic that we continue to hear about, the yield environment, but we did see it shift upward in 2021. So focusing in on some themes that really impacted 2021, obviously the leading market theme or the leading news theme, regardless, has been COVID over the past several market cycles or quarters. But we're getting to a point where its impact on the investment markets is starting to wane a bit. And so obviously, when COVID-19 hit in March of 2020, we had a humongous market impact, large drawdowns, but then the governments worldwide stepped in with both monetary and fiscal stimulus. And since then, we've seen, the markets digest COVID news in a manner that has been less volatile. As we learn about new variants, we have a bit of a playbook here. And so that's a topic that we've been seeing, but it's also been waning, which has been nice. On page 7, we're also starting to see a number of economic indicators, come back online. One of these is personal consumption expenditures. So that chart at the top right, it just tracks, U.S. Expenditures of citizens, and you can see the massive drop down there in the COVID-19 time period. But we have recovered, and spending is kind of back on track with long-term growth averages. Another thing that we're looking at as part of this is unemployment at the bottom. Unemployment levels are reaching, very low levels in terms of historic averages. But the one thing that's also very concerning now is the number of job openings. And so the gap between unemployment and job openings continues to widen. And so that's going to be a popular topic that we're looking at as well. On page 8, we have to mention inflation. This is kind of the cost of that financial or fiscal and monetary stimulus that central banks and governments across the globe have supported the economy. Well, now this is kind of the byproduct a little bit of what we've seen. And so up at the top, you can see, if you've been following the news, you know that inflation has spiked to end the year. We saw levels that we hadn't seen since the 70s and 80s at a 7% print. So this is going to, again, be a topic that continues on into 2022. On the next page, you can see what we think the Fed is going to do to combat inflation, and that is that we're expecting a lot of their policies to turn hawkish. This isn't news. This is something that they've telegraphed in their meeting notes, but they're going to do a couple things here in 2022. So by the end of March, they will have ended their asset purchase program, which supports the economy by providing liquidity, purchasing bonds. And they've also forecasted the likely occurrence of several rate hikes this year. So again, we're currently at the 0 to 0.25% rate on the Fed fund rate. You can't earn anything. That'll go up. Again, we'll have to see what happens when it does, but it's largely telegraphed. So a lot of the volatility that we've been seeing at the end of the year, the past couple weeks, has been in response to that, but time will tell whether or not, when the actual rate hikes are in place, what happens to the markets. On page 10, again, looking ahead, and we always like to look at equity market valuations there at the top. They are above, long-term averages historically, but something that we'd also like to note is they have come down relative to, some really highs that we saw at the beginning of 2021. So relatively speaking, equities have come down a bit. And again, but, how they will receive the news of the rate hikes when they come to fruition will be something that we'll have to monitor. Down at the bottom, there's also other themes that we'll be looking at in 2022. We have midterm elections here in the U.S. Those can always cause volatility in marketplaces for various reasons, and we'll have to, digest those narratives as they come. And we'll always have geopolitical concerns to worry about. Right now it seems like the Russia-Ukraine topic is starting to gain more steam, and more so to say that those events are unpredictable, and we just have to make sure that we have a diversified portfolio in place. So page 11 really, kind of goes back and shows you, we have all of this market noise. We're always going to have market noise. We can't predict, what that market noise will mean or what it will be. But as fiduciaries of these assets, what we can have is a strong playbook in place that we follow. And that's your all's investment policy statement. And so kind of as a, post-mortem of this COVID market environment, we put together this slide to really show you, what your policy meant during all of this volatility over the past couple of years. And so basically you can see that blue line is just the S&P market returns month to month. And so you can see the drawdowns early in 2020, and then the quick V-shaped recovery, as well as the growth that we had in 2021. The green circles that you see there are triggers that either your portfolio had too much equity or too little equity per your policy because of market movements, and we rebalanced. And so the first one was, okay, equity sold off, and we had to buy back into that equity market, when prices were plunging. That's a hard conversation to do, but that was what the policy said, and so we did it. I think now lots of investors are worried about the current market environment and how much risk we have on the table. But these last three bubbles here, those were all de-risking events where your equity had gotten to a point where it appreciated, we sold off, we captured gains, reallocated into fixed income. And so I think this just goes to show that, on the way up, on the way down, you have to follow your playbook. And then, on top of that, we have, portfolio diversification that we're always looking at within each one of your styles of equity and fixed income. We want to have diversification. And then finally, the oversight calendar, which is the final page here. We always like to update this, but this goes through our fiduciary touch points with you all. Right now, we're in the top left quadrant with our market environment meeting. We'll have a portfolio construction review next quarter where we give you updated expectations on the risk return profile of the portfolio. Make sure you all are still in line with the risk tolerance of the assets. We'll document that in the investment policy statement again in the third quarter. And then finally, we'll wrap up with our fee analysis again in the fourth quarter. Again, we draw this up each year, but it's always flexible. We're always happy to entertain new projects or special projects that you might have as well. So I wanted to give that backdrop because it was all of my market commentary, and then I'll give you a quick update on where we sat on the portfolio. But are there any questions with this?
Anyone have any questions?
Awesome. So if we can actually flip back to the start of the report, we can flip into page 2. This is a summarized flash version of our normal performance and evaluation report, and it's just because of the timing of this meeting is falling early in our quarter, and we don't have our full materials. We'll be sure to send those digitally as they come available. But we do have a good snapshot for you of where the assets ended at the end of the year. So on page 2 here, you can see the total portfolio ended the year at $195,277,590. Up at the top, we always like to compare the strategic asset allocation relative to the actual. You were about right on target, equity to fixed income, that 56 to 54 mix, and your target being 55 to 45. Again, that's something that we're keeping an eye on every day on your behalf. That's what impacts those rebalancing, notifications when they come to effect. In the middle of the page there on the far right, you can see the performance. So the fourth quarter return was 3.7%, and then the 2021 or trailing 1 year time period for the portfolio was positive 8.6%. Really, the equity portion of your portfolio, again, really drove the positive performance for the year of that 8.6 return. You did have some fixed income managers that were unfortunately negative for the year, just given the market that they were playing in. But again, having that diversification in place, allows you to navigate some volatility as well. I also wanted to provide you, I have an updated value actually as of yesterday's close. I know the markets have been.
You want to know this?
I'm going to tell you. So as of yesterday's close, the portfolio had incurred some losses to begin the year. It sat at $187,340,000. That represents a quarter-to-date return so far of negative 4%. I will say that is in line or probably better than your benchmark at this stage. The S&P for that time period is down 7%. Broad U.S. fixed income is down 2%. And then you have exposures to some riskier assets as well. It's been a choppy market for sure, especially this week as well. But again, we have seen some buy pressure when we've seen sell pressure as well, so that's been nice to see. But your portfolio continues to be diversified. You do have exposure to things that are playing well in this environment that may not have been playing well in the environment last year. So again, that's all intentional. Happy to answer any questions as it relates to performance as well. Again, it's just a sneak peek. We will pass along the full book when it becomes available. But that is all I had prepared for you all today.
And in that full book, we'll have a comparison to other foundations like us, right?
Yep.
Does anybody else have any questions? All right, thank you very much.
Thank you so much.
Thank you.
Coming.
Thanks for making the trip.
Oh, absolutely.
Safe travel.
Okay, we have an approval of claim for Capital Cities for the fourth quarter of 2021, and that is $16,250. Do I have a motion?
Motion approved.
Second.
I have a motion and a second. All those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion carries. Do we have an attorney's report today? Any other matter that may properly come before this board?
Motion to adjourn.
Second.
Got a motion and a second to adjourn. All those in favor?
Aye.
Opposed, same sign. We're adjourned. See you next time. That's all you do.
You betcha.